Hi, this is Randy Finney with the Right Side of the Chart, and this is a closing market wrap for Tuesday, February 4th, 2020. I want to do a quick update here. Subscribers, I had mentioned this morning before the market opened today, I'd be out most of the day today. So as I said, I'd follow up on any questions that you have, any trading room chart requests. I'll try to get to those today, later today. Just got back to my desk and want to do a quick market wrap. So where we left it yesterday, on yesterday's close, well, it wasn't a closing market wrap. I got it out just before the close yesterday, shortly before the market closed. I also covered natural gas, crude oil on that as well. So that one was not a public video. That was for subscribers. And in that I stated it was pretty simple to me. It was I said, let's just keep it short. I said we have two levels to watch. We had QQQ still holding above that key trend line support. That's the uptrend line off the October 3rd lows. And we had a pretty well-defined resistance level just overhead at about 220.287. And so I said, at the risk of oversimplifying things, bullish if we popped above 220.287. Impulsive, especially if we took it out with conviction. Bearish if we went below, and that was the scenario. So as I said, I had been holding off. Originally put a small starter short there, covered there that day. The SARS scare and support right before the fangs, recycled in there, and being that was gone today, I've been holding mental stops on that position. So I'm going to, I didn't get back. I thought I'd be back before the close. So now that is, that one played out well, recycled in long up to there. And, was on the wrong side of this one today, but by a small amount where the market was up 2.29%. And that's right about where, because that's, I added that back just a hair below. That was the uppermost bounce target zone and my preferred bounce target zone. So that's where we're at. Again, to recap, there's that 220, 287 level, pretty well-defined resistance level, and we gapped above it. So there's a couple other levels I want to show you. It was support right here. Then it became resistance right there. It was also the top of that gap, and that's it. So that is the resolution of this small. We had that price compression going on here, and really formed. If you look at it this way, it formed an ascending triangle pattern with the uptrend line and the horizontal price resistance level. So yeah, absolutely near-term bullish. Now, had I been around for the day, I may have pulled the plug on that starter short. But as I mentioned to you guys on the site that I've added a couple, we have the longs on as of today, the natural gas. We're using UGAS, or NG is my proxy. UGAS, our UGAS long today was up about 10%. Crude also, I'm viewing that as a proxy for the reasons I've stated. I won't get into the technicals too much there, but went long crude at support yesterday, down a hair on that one, but we're still above our stop, and I still like that one very much. And as I said, I think that crude oil, I'm going to stick tight right now. Again, as I said back here, I will not add or take that to a full short position on the indexes until and unless we start to see some downside evidence. We break those support levels, primarily this trend line here. As I said, it's I don't like, in most cases, I prefer to scale up on a position, meaning as a position starts to work out, and not scale down, average down on a position that's going against you, especially if it's going against you in spite of technicals. The only time I'll average down on a position, meaning whether it's, when you're talking short, it gets a little confusing. When I say average down, I'm talking working against me, like in this case going up. The only time I'll do that is if I have a predetermined scale-in plan, if I'm going to go in here and I'll say I'll go up to, but not that level. So that's where we're at. So I'm going to take it on face value, and that's why I will not and have not added to any index shorts, but there's still plenty of other things out there. Which reminds me, I've got a few other trades to update. We just recently hit, and I hadn't posted an update yet for subscribers. Let me just look at that chart. There's not enough meat left on the bone really for anybody else to enter that this time. Our CWH, this is still an active trade on the site. And this is one of our active swing trades, as well as what I call growth and income trade, because it pays a dividend. We just hit that recently for a 61.8, 62% gain right here. It was a 60.03, but we had a dividend paid out since we entered this one. We bought it back here at 10.15. That's the official long entry, and I need to update that. And I just want to tell you guys, there's something I saw in here today, and again, I wouldn't chase it here. This is still the final target. But I wanted to mention there's a trend line that's formed now and potential negative divergence if you draw like this. So I'm going to take a look at this and update some of the other trades today and decide whether or not to close this one out early. But at the very least, I haven't raised the official stops. At the very least, at this point, since T2 has been hit, and we got the expected reaction. Somebody asked, a new subscriber to the site, why are there different price targets? I posted the answer. It's under the FAQ page. Those are levels where reactions are likely. You hit this one, you had a reaction along there, pulled back, tested it again, and then moved up to the next target. We've had a reaction. And I just want to make mention, so the stop, the logical stop for those of you in this one still would be right below, somewhat below, not right below, somewhat below the trend line, and then you have some price support right there. So again, 62% gain so far in a couple months. Time to tighten up the stops on that one. I'll get to posting an official update on that as well as UGAS. I got about post the entry was triggered after I left this morning, right after that. And then what else did I want to show you? Let's go back to the indexes. PBYI long was up 32% today, and that one still looks good. But I'm going to go back to the SPY. I want to show you this. Well, let's just one more time toggle back to QQQ. Again, we zoom in real tight, and those were the levels to watch. And as I say, to me, QQQ is the more important of the two indexes, even though SPY is much more diversified. On SPY or the S&P 500, you have 500 stocks within more sectors, 11 different sectors, whereas QQQ, you have fewer sectors and only 100 stocks. However, they're the stocks that matter. So right now, again, you can't take this as anything less. As I said, especially an impulsive break and close, so check right there, bullish. So like I said, not only am I not adding any short index shorts right now, I'm more concerned tomorrow. Like I said, I'll give it room, and I'll tell you right now why I'm giving it room. I could certainly close out, the index shorts right now, after the close, being that I got home after 4 today. But here's why. SPY has an almost comparable level. Well, by that, what it is, when I say comparable level, here's that same gap that I just showed you that defined. We had the support was a little better defined on QQQ, but there was also some resistance right here, and that's about 328.77. Then we had the gap down. Remember, the top of a gap is a natural, the top and bottom of a gap are natural support and resistance levels. So the top of that gap was and still is, and there's the primary word, still is resistance. We backfilled it right there, almost a perfect backfill, and we were rejected. We ran up again. We tried to pop it, but for all intents and purposes, 329.06 right now versus, and again, these are not exact 328.77. Here's a 330 point index. So a 1 point, even a 2 point move is statistically insignificant. You're going to get those variations. And as I always say, it's the daily close. So for, again, round that up, call it 329, call it 330, call it 328, whatever you want. The closest round number is 329, and that's right where we closed today. So, impressive rally. Certainly because of the fact that QQQ took that level out, that is why, again, I don't think it's objective to add to any short positions. And if you close them out, fine. If we fall back below it, great. You can always add back. Like I said, if I was around, I might have closed out earlier today. I expected to be on and off the computer, even though I was away from my desk. I had my phone and I brought a laptop with me, but I wasn't able to really get to that today. It's been a busy day. I had some things I had to take care of. That's it. So here's what I watch. Any more upside? I mean, if we do this tomorrow, it opens a door. We haven't made a new high on the S&P 500, but it would most likely open the door because I'm viewing that level as comparable to the level that, again, QQQ took out today. So that's that. I haven't even looked at it yet, but let me look at the Dow and tell you there's something similar. So here's DIA, the Dow Jones Industrial Average ETF. What I see is, a very clean up trend line. Again, comparable. That's the same October 3rd low, the same trend line I'm working off QQQ. We broke down. And so remember, this is, although those top heavy FANG stocks in technology has the biggest weighting on the market, even the S&P 500. It is not the whole market. So the S&P 500 as well as the Dow, all I see here is a very clean up trend line. Forms a rising wedge. I don't have the whole chart marked up, but like the others, we had negative divergence, breakdown, initial leg down, including a breakdown, a gap down, a back test, and a rejection, and call it what you want, but right now it is still a near-term downtrend. So the market overall, other than the tech-heavy FANGs, there was your high, 1, 2, 3, that's slightly lower high. A downtrend is defined as a security making a series of lower lows and lower highs. Again, if we go up much more, you can see here, I can't really fit a clean downtrend line. I could do this, that. There's not a lot of reactions, but much more upside. It calls the near-term downtrend into question, but we're well below the highs right there in the Dow, or at least DIA. You can see here, I've measured out. We're about 2% below. And like I said, you can't write off the case that I'm still leaning towards, but the market needs to show me that it can take out these lows before I consider adding to any shorts right now. But if we come up here, look for that, maybe a rejection. You have that high right there. There's the top of the gap on DIA right there, that same gap from Monday before last right here. And that's about where we stopped as well. So just like SPY, it's almost an identical chart, as it should be. The Dow is going to be more closely related to SPY. So there it is. The Dow, SPY, S&P 500 at resistance and still below trend. SPY can draw it a couple different ways, which I think I have here. Yeah, there it is. There's your clean uptrend line. This is probably the better one to look at here off the October 3rd lows. Same exact trend line I've been working off on QQQ for a while. Boom, big move down, sell signal triggered. However, with the Qs being very strong in the FANG stocks today, and SPY is slightly higher there, starting to call the uptrend into question. But plenty of room if it wants to make a full back test. So like I said, I'll just sit back as I have been the last few days. I told you guys I'm not adding, just waiting and watching as far as index shorts. But remember, they're a very small part of what I trade and what I think anybody should be trading. As I just mentioned, we had numerous things that are up today and lately, and we're looking at all different areas of the market: Bitcoin, precious metals, commodities, individual stocks. And right now, today, net bullish because of what QQQ did, but again, not outright bullish, because you have the S&P 500 and the Dow pretty much rallying into, there's that, the bottom of that candle there, into resistance. And I haven't covered IWM in a while, but let's look at that. Every now and then I like to look at the small cap index. A lot of lines on the chart. Let's do this. Let's move this one up right now, because that's a pretty important reaction low. As I just showed you on SPY and QQQ and everything. Until and unless we took a turn down soon and took out those lows, it's hard to make a case to be aggressively short. But right now, let's look at the charts for what they are. Here's that same trend line, October 3rd lows. Let me clean it up and tighten it up right there. That fits a little better. And pull it down like that. That's how it should look. And you see quite a few lines here. Let me just highlight the most salient levels right here. There's your uptrend line, again off the October 3rd lows. This is just showing right here how we were diverging at the highs right there. And so we have a breakdown, a back test, impulsive leg down, and so far a snapback rally. We're still well off the highs. We've closed off the highs in IWM. Go to the top of that candle, we're still, as of today, closed about 3.5% down below the highs. So what you're looking at now, as I just showed you, pretty much every major index, you can look at the mid caps if you want to be all inclusive, they're still off highs. The only index that's made a new all-time high is QQQ, which is actually not a very diversified. I always say, kind of half joking, QQQ is simply XLK, which is the tech ETF, tech sector ETF, with an Amazon kicker thrown in there, because Amazon technically is not a tech company. It's going to mirror this chart. So that's it. So the rest of the market is still, but look, it's not far off all-time highs. So let's not try to spin that as very bearish. Let's just say we broke down. We had some pretty powerful sell signals. which to me are still intact, because all we're doing right now is we're back testing. We haven't even back tested or come back to where we broke down. That's the thing. Remember, we broke down. I was going off these smaller trend lines here on the 60-minute charts on both QQQ and SPY. So we broke down there, and we're still below that level. QQQ did move slightly above the breakdowns. That's it right here. We can see it on the right here on this red candle. That was from Friday a couple weeks ago. And on the 60-minute chart, as I said, we have that trend line right here off the October 3rd lows, still holding on QQQ. And that is again why that's what I was saying. We need to see this trend line get taken out. It's the same trend line there, October 3rd lows. So the Qs are holding support so far. Put a new high. We still have divergence on the 60-minute chart on the RSI 14. The daily divergences are still intact. We're getting pretty darn overbought too. Let's look at the futures for you as well. Here's what NQ looks like. I'm going to zoom in. I know you can't see this on YouTube. I'm going to zoom in a second, but I just want to show you that I put a line here on the RSI 14. This indicates how overbought you are. Usually 70 or above is considered overbought on a security, but I don't use that line. You can see I don't have a line at 70. Why? Because if I look at it, NQ crosses above in a bull trend especially, it hits 70 all the time. Now a lot of times that does cap advances right here, but there are quite a few extremes. So I like to eyeball a chart and say in this case about 86, give or take 86, 87. That's pretty much the extreme reading as far as overbought on and this goes back 3 months. So you can see what happened last couple times we get there. If you didn't correct right away, you had minimal upside, talking 1%, not even probably 2% until you had a significant correction. We didn't quite hit it there. We hit it right here. We had one of the biggest drops in months. It wasn't a lot, but it was a few percentage points at least there. And again, we haven't hit it. We're very close. We're slightly below now. And what I wanted to show you, other than the key trend line right here, here's our 60-minute uptrend line. This is still one of the most important levels to watch right there. We're above that trend line, and I want to show you there's still some divergences here from this point to this point, and then I need to tighten up this chart get in a lot closer, and you can see a very steep uptrend line right here on the NQ. So we'll watch that. That could, and I think it would, if we break it, could trigger a sharp pullback. I think it's all going to depend on, right now, SPY. I'm watching SPY only because there's really nothing technically, if QQQ goes up more, we don't have any resistance overhead. Anytime you have an index or a stock or an ETF at all-time high, you don't have a resistance level. SPY, DIA, as I showed you, MDY, IWM, they all have resistance. So that's it, guys. We'll leave it as this. Bullish today because of that breakout, as I said, and that was the only one I focused on yesterday on the closing end of day video, was bullish above 222.87, especially a close above it, which we got, bearish down below. So that's it. We'll take it as I'm not going to call it a buy signal for the reasons I stated before. The other things I wanted to get to, let's see here. No, I think that's it. I do want to do an update again for subscribers. I want to go over some of those other trades that we have out there. I want to talk on the natural gas, crude oil, an update on that, some of the biotechs, PBYI. There's one more I wanted to talk. I wanted to mention this one. Back a couple months, a while back, in the summer, I was out on vacation when I was down in Costa Rica. I took the time. There was one that really stood out to me, and I wrote about it, and I gave you this setup right here with AMIT. I really liked it for fundamental reasons and technical, and I gave you a reason why they're working. They called it AR101. They have a brand name for it now. It got approved on Friday after the close. Their peanut allergy drug, and I said it would be a long and a break of this bullish falling wedge pattern here, and showed you targets all the way up to about the 33.56 level, where we actually, here, I'll zoom in a little bit. So that was what was our entry trigger, and again I was About to go on a jungle excursion. So this is what happened since then. We had a breakout, a back test that I hadn't followed up recently, but I did want to mention since we just got approval on Friday after the close. So there was a breakout, back test, came in the wedge, back tested, and moved up. And it's about from the breakout point, broke out right about here. Shortly after that, it went up about 100, about 80%, 83%. But it set up recently, put in this divergent high, broke down, back tested. Here was the approval. The market closed here Friday. They announced the approval after, popped. And I mentioned this. I wanted to bring it up because I have a couple relatives in this one too, and I said no, not time to add. I said what you're probably going to get is a buy the rumor, sell the news kind of event, and so far that's what we had. It popped open big at the open yesterday, even bigger in pre-market, and they've been fading it since. And again, that's kind of indicated here in the charts. However, I do want to say this. Now we've come back to this 29.20 support. So I'm going to revisit this one and take a look here. PPO is constructive and all that. So I think a lot of the sell the news kind of thing, when you have a drug and it's looking good in clinical trials, and I talk about this often, and it works with any stock. You look at the market itself and you say, man, things are going so good right now. How can you be bullish or how can you be bearish on something? And again, you have to look at a chart and say, well, how much of the best case scenario is priced in? So we're gonna loop back to that again. We'll talk about on the markets going forward. But right now, like I said, I am let's say very near-term neutral. Not going to make any changes to those index positioning. The much easier money to be made right now is in the individual stocks, sectors, commodities, things like Bitcoin and all the other things. With the market at a don't call it an inflection point, just a level to watch. So there it is. We'll end it here. Another 1-2% upside in SPY, and the Dow should open the door for new highs. It's not going to really change the longer term technical structure of the market. You'll still have the same story, market working its way up in an uptrend, with some divergences or quite a few divergences intact. And so we'll pick it up tomorrow, just see which way things go, and see if this was just kind of a one-day wonder, a stop, clear, and pop in the Qs, or a breakout that's going to continue to go. Like I said, the overbought conditions alone, if you're wondering why I keep talking about not buying it long, even though I said that would be bullish if we broke out, has to do a lot with the extreme overbought conditions right now. And the fact, again, it's about risk reward. So how much more upside is there in the Qs versus some of these individual stocks, sectors, commodities, things beat down like oil, beat down at a great long-term support level, extremely oversold. So that's the way I'm viewing the trades. We'll wrap it up here, and we're going to pick this up tomorrow. We'll see how, the day closes. This has been Randy Finney with Right Side of the Chart. Have a great day.